A stock market correction is defined by a decline of at least 10% from the peak and generally refers to the broader market like the S&P 500 benchmark. According to analysts, the typical correction for the last 75 years lasts about 4 months or so and sees the market correct on average around 13% at its lows. This is in contrast to a bear market, which means stocks have declined a minimum of 20% off of their highs, and that generally lasts 13.2 months on average. What's interesting though is the recovery. A correction takes on average around 4 months to recover back to its highs and make new all-time highs. So all of this happens relatively quickly in the grand scheme of things. It's also worth noting how often these corrections occur, because in the last 75 years, we've seen 26 corrections, meaning on average we see a correction every 2.8 years. Sometimes it happens more frequently, sometimes spread out more often, and things in the broader economy can contribute to how often we see a correction as well. So why am I discussing all of this today? Well, smash the like button down below because we're going to be talking about corrections. We're going to be talking about if the market is actually going through a correction right now and whether this is a buying opportunity, and we'll also go through some stocks that I have an eye on that I noticed have corrected quite significantly. Over the last month, the S&P 500, also referred to as the general stock market, has hit an all-time high and since declined around 10.6% from its peak. Guess what? This means we got a taste of a correction here. And although we haven't had a trading day yet that it closed down over 10%, it did decline intraday more than 10% just a couple of trading days ago. Looking at the chart, we can see this decline came fairly quickly, and in my opinion, we were well overdue for a pullback to cool off a bit after a big run in the last few months. But guys, we just saw the stats. Market corrections happen often, they're normal. Market corrections are part of the cycle here. You know, stock market goes up and down, and maybe we're going through a down move right now. However, one thing is certain, and that is that every past stock market crash or correction has ended up being a buying opportunity. Now, I know some of you will say, well, this time it's different, and guys, you hear that every single time the market declines. This time it's different. This time it's not going to correct. This time we're going to go into depression, all that kind of stuff. But you know what? The stats speak for themselves. As long as you believe that the US economy specifically will be stronger in the future than it is today, then the market in theory should also be higher than it is today. So all I'm trying to say is that when we see the market correct 10% here like we have in the last month or so, we shouldn't be panicking and selling our stocks and waiting for lower prices. What we should be doing instead is looking for buying opportunities, maybe start averaging into positions, because like we're going to discuss in a second, there are some great opportunities starting to present themselves, and we should be embracing all of this. Market corrections are a golden opportunity to lower your cost basis on great companies. Remember, when the stock market itself declines around 10%, and that means that there's a lot of stocks that have declined much more than 10%. The S&P 500 is comprised of just over 500 companies. So if on average we're seeing a 10% decline, it means there's a lot of companies that are much more than a 10% decline, and then conversely, a lot of companies that are either at or much less than a 10% decline. And personally, guys, I have seen some great opportunities, and I've started making some big buys in the stock market over this last week. Those in my VIP group know exactly what stock I'm talking about, and I think that's a golden opportunity stock that will present incredible returns over the long term. So if you are interested in that stock, or you want to look at my portfolio and what stocks I hold in there, check out the link description down below and check out our VIP membership group, because I disclose all of my positions in there. But anyways, I do want to put your mind at ease, guys. Don't panic. Embrace this correction. Look for opportunities and just focus on your plan. This is going to be one of those times when you're going to look back in a few years and you're going to say, I wish I bought more so-and-so stock instead of panicking. Okay, so now let's get into the fun stuff. I'm going to go through some examples of stocks that I've seen decline well over 10%. And you know what? Maybe some of these companies are ones that you hold. Maybe they're ones that you've looked at initially but kind of forgotten about because they ran up too high, or whatever the reason is. I just want to bring your attention to some of these opportunities. And of course, guys, do your own due diligence if you do plan to buy them. But I'm here to give you some ideas. Now, the first thing I noticed was that high growth companies that have performed incredibly well over the last few months, we're talking triple digit gains in the last few months, have seen the biggest corrections from what I'm looking at. Overstock, ticker symbol OSTK, was the first one that caught my attention, that saw a decline of over 50% and still sits near these lows today. Spotify, another high flyer, down almost 25% off of its highs, correcting more than 2 times as much as the broader market. Rocket companies. This one is the interesting one because it's a recent IPO that went public back in August and had a double whammy. This is because it crashed not only with the broader market going down, but it also combined with an earnings report that investors were not too thrilled about, and it's down near its lows now at around 43%, bringing it close to its IPO price once again. Splunk, another popular high flyer that I've personally been very interested in buying but haven't purchased yet, has come down 25% in recent weeks, sitting at prices we saw back in mid-May. And guys, the list goes on and on for these high growth companies, down well over 20% in a lot of cases. And if you were optimistic a few weeks ago on these companies, you wanted to buy them at their peak, then why wouldn't you take this opportunity here with the 20% off sale? But okay, high growth companies are just one aspect of the market. How are these stable, blue chip, consistent companies doing? Maybe they've held up pretty well. Maybe they're actually up over the last month. Let's take a look. Altria is a very consistent business with strong fundamentals, including that juicy dividend, but it has corrected over 16% in September and is still sitting near these lows, and in my opinion, it's showing incredible value. I did make a video recently on Altria, so check that out if you want to learn more about this business. Lululemon is a world-recognized brand in clothing, down nearly 30% off of its highs, and this decline is a combination of a market decline that we've seen and their earnings where investors were expecting much more from the company. Johnson & Johnson, stable blue chip company that rarely sees big declines, is down near 10% currently, more or less moving in line with the market. So this one kind of tells me that, you know what, it's declined because of the market solely, not really because of the actual fundamentals of the business, which to me signals a great buying opportunity. Visa, this one's one of my favorite finance fintech space stocks, and it's down around 11%, and you don't see many declines in Visa either, so this is a very good buying opportunity as well in my eyes. And I can go on and on like this with these large companies. It's pretty consistent across the board. A lot of them are down around what the market is, you know, around 10% or so, some of them a bit more, some of them a bit less, but the theme is pretty consistent. Now what's interesting though is, just for fun, I looked at the big tech names, and this actually caught me by surprise. Google, aka Alphabet, is down nearly 20% off of its highs, which is quite honestly surprising to me. Facebook, another massive giant, down slightly over 20% off of its highs. Apple, the largest company in the world, is down a whopping 25% off of its highs in the last month. Mr. Softy, down 16% after it got caught up in all the TikTok news recently. And finally, Amazon, down almost 20% from its all-time highs. Clearly, without a doubt, can't really dispute it, big tech has corrected massively. Most of them are down around 20% or more, which signals, in my opinion, some great opportunity. Now, it's arguable, you know, some of them were very overvalued before this correction, so now they're back to like fair valued or just slightly overvalued. But either way, if you were a buyer in these companies just a few weeks ago, then the opportunity is there to either average down on that position or maybe now even initiate a position at these lower prices. Also keep in mind these big tech names, you know, they're down more than the broader market, and because of their weight in the index, they pull down the index quite significantly, which pulls down other stocks that aren't really affected by everything that's going on, like Johnson & Johnson, which if you're smart, you can go out there and dig for these, you know, niche names that don't really have much correlation to big tech, and it ends up being a great buying opportunity. All I'm trying to get across here, guys, is that if you've been a buyer in the market over the last month, then the prices right now should seem very, very attractive to you. And if you've been holding off and you're waiting for lower prices, there are opportunities out there for sure right now. And I personally, like I said, have started buying stocks once again at these lower prices. Now, I'm not going all in. I'm not building up my positions 100% at these prices because a lot of companies are still overvalued. A lot of companies are still fairly valued. There aren't many deep discounts, if you will. But if we continue on this track, and remember, on average, around 13% correction in the S&P over the years. So we could see more volatility, we could see more downside here in the coming weeks, and 10%. If that's the case, you bet that I'll be deploying a lot more cash in the stock market. Now, again, if you're interested in what stocks I buy in my portfolio, all that kind of fun stuff, check out the link description down below to our VIP membership group where you can join our Discord, chat with me and other members in the group, and participate in helping build your investment career. Guys, either way, hope you enjoyed this video. Let me know in the comment section down below what your thoughts are on this current market correction. Do you think we're going to go lower? Do you think, we're pretty much done here with the 10% dip? Love to hear your thoughts as always in the comment section down below. Thank you for watching, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.